Good afternoon, everyone. It's Chris from Soul Society R as well as Excel. You can find me on the both websites, Twitter, Instagram, as well as Discord. We use this adaptive algorithm that was built by traders such as myself for side market, up market, as well as down market with no bias. Remember, this is for educational use. Use it at your own risk. Data may not be copied unless requested from us from either website and get in contact with us. Let's go to the first slide that I have up here and what I did. Our institution taking a defensive stand and a short signal that we are signaling on the weekly bar. You can see it here. It's in a downtrend we had last week, side to down, and this week was an engulfing candle before the election, which is November 5th, as well as the Federal Reserve announcement on November 7th. So I am not biased. If we can take a look at the February 19th till March 2023 in 2020, the highs and lows, we were basically piercing the 50, the 18, as well as the 200 SMA on the reset. If I look at the November high of 2022 till the lows of October before the 2023, the trend in the 18 and the 34 and the 50 simple moving average crossed and continued lower. You can see that 2022, there was a lot of consolidation and we had a lower high. While here we're making higher highs, while the RSI, you can see here, it started to downtrend too. It started to lose, the 70, 80 area. Here we were peaking in the beginning of April, fell down, rallied up in July. August was the low, we rallied up. But the RSI is in a symmetrical triangle, and I did this last week. And I showed pay attention to that downtrend in case there's continuation below the 61.8 to the 50 and reversing back up, or there's going to be continuation. This was last week's slide that I put. I put the E-mini, which is the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, and I put the scenarios of a drawdown and a draw up. I did not put them on the chart, and I said pay attention to the payroll that will be coming out November 1st, which happened yesterday. We had a little reaction. We had a look up, and on Friday we sold off. We got election November 5th, federal statement on basically there's going to be a statement out there by the feds and J Powell on the news. So pay attention to it, an announcement. We had Apple, Microsoft, and Meta coming up. And I said, please don't be biased to either side. And I drew the symmetrical triangle on the RSI showing an 80-20 in a symmetrical triangle and started to pierce down a little bit lower on the weekly chart. Last but not least, remember to give us your commentary. Hit the subscribe model on YouTube. Get in contact with us. Let us know how we can help you if you need any assistance in learning how to trade. Let's go to the first S&P 500. I have it up here, but what I want to do, move it from the weekly to the daily chart. We're going to go time frame. We're going to do custom. We're going to go from beginning of the year till end of the year only. I want to show the daily. And what I'm going to do is basically go over all the values in relationship to where we are today from the August low. If I zoom in from this area here, and I want to look at the overall technical, you can see when the 5 simple moving average in the 18 crosses, this becomes a little bit more bearish in the, coming in on the daily chart. We lost it. We fell down to the August low, which we missed this full 100% gap. We U-turned back up, created a head and shoulder or a cup and handle, pushed higher from these two candles. We rallied up, but you can see now the 5 and the 18 are starting to get tired, and the 5 crossed the 18 and the 18's on top. And you can see that on the 34 simple moving average between the 18 and the 50, it's holding between these two candle. And if I am looking at these two candle in an overall consolidation, we looked up, we consolidated, and we fell further down. We are hugging the 34. We looked up, but this is an engulfing candle on this gap. We do have this gap. If I want to mark it on the chart, what I do is I usually put this area to show the gap, or this one, or even this one. This is a partial gap. I edit the property. I'm going to show it. extend it to the right at least 3-4 days. This is the gap till the 6th, which is the election. And if I do one more day, which is the 7th, that would be the Fed announcement. At least I have an idea how much is there for the gap. But if I want to look at the gap from here to here and I want to extend it, I want to edit the property, and I want to make this a little bit like a little bit darker or pinkish color or purple, whatever. And I'm going to go to the 7th. I want to show you the difference between those two levels, how much difference there is to cover that whole distance to go up, if there's going to be continuation to the upside, or this engulfing candle inside this baby. It's like basically looking at this candle, because this was a push down gap in continuation. We tried to look up on Friday, but we fell in, but we stayed inside. Think of it as a baby candle inside a mummy's stomach. If we end up losing the 50 simple moving average, I would look for the further low of the 89 EMA 116 and eventually the backside of this channel, and that would almost get us to the 61.8 or the 50 SMA in case things go south. But in case we do reverse and go back up, I'm looking to clear that short linear regression uptrend channel to the upside, opposite side of the fence, which is the upper channel on the charts. And even if I connect this control point with this one, it will give me a similar linear regression uptrend channel. That way you can see it's a little bit further light. But if I connect these two here, you can see I broke down. But if I connect it to here, that's still a little bit off. So what I would do is I grab this candle here and this one here, and I'll pay attention to this wedge in case we fall further down or up according to the momentum in the market, according to the election day, as well as the Fed announcement. Let's go right now, take a look at the NASDAQ. And I want to talk about the overall sectors. You can see in the NASDAQ, it has been a little bit more stronger, but the only thing, it didn't sell off as hard as the S&P 500. You can see that engulfing candle, we had this gap. We're still inside that engulfing candle. This is a baby inside it, but didn't fall to the 50 SMA or the 89 or the 116 SMA. If I end up losing here, I'm going to look for the opposite side down to the 50 and eventually the 61 and the 200 SMA. In case we reverse and we clear this gap, we look for the upside and that linear regression uptrend channel on the charts and clearing the prior high from July 10th of 2024. So let's go take a look at the overall NASDAQ and XLK. This is the tech sector. What I wanted to show you here, I have the mega on the NASDAQ 8. I did not put mega 7 or mega 9. I'm using Apple. Apple was a sell-off. Amazon came out positive on the earning announcement on Thursday. Friday was continuation to the upside. Alphabet, Google, and Google were basically neutral. Facebook Meta was down. Microsoft was a little bit up. Netflix was flat. NVDA reported in the afternoon after the close they're going to be added to the Nasdaq and the S&P, so it gave it a little bit of push higher. And Tesla was a little bit down. But the overall sectors in the S&P 500, the energy was down, discretionary were flat, and financial utilities were down. Material, consumer staples, technology, real estate, excuse me, industrial, healthcare, and telecommunication. What I wanted to tell you is make sure when you're looking at the tech sector and all the other sectors in the S&P, trade what the charts offer you. One important thing, pay attention to the bond market. What I want to do is show you IEI, excuse me. You can see that the bonds on the 3 and 7 year are starting to come down while the yield is coming back up. Or if I look at the Z and the 10-year notes, and you can see it's the same setup. But if I look at the TBT long-term yield, I'm paying attention to that TBT. I'm looking at this sector. Is their interest rates going to be a quarter basis points from the Fed drop, half a basis point, quarter, or they're going to wait till end of December to do the half a point. So we're going to pay attention to what the bond is doing in relationship. And you can see that downtrend channel, we were consolidating. We did that little hump. We did that little shoulder or the head. This is the shoulder. This is the head. This is the other shoulder. And we cleared this area on these two gaps. Look, tested it, gapped up, continuation. But we are on a major linear regression uptrend channel from a long time ago, and I drew this channel here. You can see it. We fell through, but I wanted to show this here because we were in that linear regression uptrend. We coming back to it. Does this mean that the yield's going to continue higher, or the Fed's put a break and decrease it by a quarter or not? It's going to depend what the announcement is on the 7th. Let's go do the measured on the Pro ES, and I'll show you how to calculate it on the weekly. We're going to remove this. We're going to go to the drawing. From weekly, we're going to end up doing an intraday. I'm going to use a 30-day range to show you the overall range. We're going to use 6 hours instead of 4. That way I can use 4 candles for the whole week and month. We can see that the range from this week, the high was on Tuesday. This is the Sunday overnight action. This was the Friday. I'm not going to measure from here to here. A lot of people will measure from here to here. You can see the machine did the support, the resistance, the 50% where it is. If I do this on a Fibonacci, it's going to look identical. And I'm going to show it to everyone so that way nobody says, oh, why is it this way or the other way? It doesn't make a difference if I draw from top or bottom. So I'm going to grab this, show you the measurement for those last 10 days, where the highs were, where the lows were. I did not go all the way to the 57.25 quarter. That area is going to be very important between the election and the Fed announcement. Are we going to look below it and come back up, or are we going to continue lower or reverse back higher? So this is the measurement for the overall market bi-weekly. Edit the property. I'm going to change the color on them just to make them gray so everyone can see them. And I'm going to push OK. So on the other side, what I'm going to do, go get the weekly measurements. I'm going to collect the highs and the low for the week. And if I extend it 2 weeks out, like I did, we can go back a little bit in history. Let's do that. So you can see where the measurements are in relationship to those levels and where the extensions are. So my 50%, as long as I'm below that 50% for the week, and I cannot get back to the 25% to continue higher, the extensions to the upside and downside on the charts gonna show me the extension minus 100 plus 100. But can the deviation go 2 times standard deviation? We can probably do more than 180, 200. It depends what the announcement is on the elections, who will come into the White House, whether it's Republican or Democrat. It doesn't matter. I'm more conservative person. I know who I'm voting for. It doesn't matter. But the most important thing that you understand, we can do 2 standard deviations to the upside and downside. This is why I'm showing you the 161 and the 261. And even if I go further down, this is my 423 and 261 to the bottom on the days where the announcement coming in on November 5th or the 7th. This is why I put these extensions to show you where they are on the S&P 500. We can do the same thing on the Nasdaq. We can do it on QQQ, and I will show you how to do it on QQQ instead of the Nasdaq 100. You can see the range for the week. This is the Fib for the high. This is the weekly measured move. I'm not going to go all the way down here. What I'm going to do is get the Fibonacci or the measured move from here to here, and I'm going to extend it 2 weeks back, edit the property, and we'll go till about, let's do the 0 1. How about that? If I go back, this is the historical for the monthly, but if this is on the measured move, the extensions to the upside and downside are usually 180, 200, minus 80, minus 200. Minus 80, minus 100. Can we do two deviations? You can grab that, duplicate it to the top, duplicate it to the bottom. That will give you 2 standard deviations. But if I use a Fibonacci for that measured move, and I go get a fib and I go from high to low, these are my extensions to the downside or the upside. It does not matter which way I am. I'm looking for these levels on either side, not to be biased, and I'm going to trade what I see, not what I think, and understand that risk is on the table till basically after November 7th. I hope this was helpful. If you have any questions, please let me know. I'm here to assist you and help you. Take care. Over and out. And once again, check us out on the website. Get in contact with us. Give us a call. We're here to help. Take care.